In this video, I want to speak about GBP USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment has a very strong level of previous monthly support here, again here, again here, and again here, which now that the market has broken it to the downside, is currently acting as resistance. So what the market is currently testing here and rejecting to the downside is previous support turned resistance. So a deeper rejection to the downside could be expected away from this zone. Dropping down on the weekly, what do we see? Now, from a weekly perspective, we can see how during this move to the downside, starting from this high, reaching this low, there is one candle of a different color, which is exactly this green candle here. Now, this shows how this zone is precisely previous support that is now turned resistance. And as the market is testing previous support and resistance, we could expect a bearish price action to be developed away from this zone. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, what we can notice is that we do have a market which at the moment is testing very strong daily support and demand. From here, multiple rejections to the upside were created. However, in creating this move to the downside, the market is currently printing a series of lower highs. Now, in a situation like this, what could easily be created here is a breakout to the upside. However, as we have already seen, monthly and weekly time frames are both currently showing very strong resistance all across this zone, meaning that even if we get a move to the upside, it could easily be a fake move and then the market creates the continuation lower. So where things would actually get way more interesting is if we actually get a break below this support. Now, there is no confirmation that it will happen, but if we would get a break below this support, at that point, all that previous support would become resistance here. And on the retest, this is where we would have very good probabilities to see a deeper rejection away from that monthly resistance that we have identified. So we don't have any confirmation that the market will actually break below the support. But if we actually get the break, if the market breaks below the support after the break on the retest of this previous support and resistance, this is where we would have very good probabilities for a potential rejection to the downside. So if the market breaks on the retest, how we could be approaching this potential rejection to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the downside for the market to complete this impulse correction and impulse pattern to the downside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.